Well, for tax policy makers and businesses alike, the emergence of new business models and workflows catalyzed by the rapid digitization of economic activities has brought about a variety of teething problems. Now, the recent economic disruptions caused by the COVID-19 pandemic and the subsequent adaptation processes that businesses have had to embrace, coupled with the rise of the informed, tech savvy customer, has had a trickle down effect on the world of tax compliance. An example of that would be how slowly yet steadily more and more tax administrations across the world are relying on behavioral insights and analytics to better understand the changes in taxpayers' attitudes so that practicality and specificity for troubleshooting common pain points is maintained when designing policies. Now, one such sector where technology can make a significant difference in terms of streamlining the tax compliance process is manufacturing. With ever evolving business processes and tax regulations, manufacturers often find themselves faced with challenges that hinder efficient filing, remitting, and reporting on taxable transactions. Now, maintaining compliance with tariffs and taxability rules across different jurisdictions and managing exemptions for audits while sustaining a growth in the bottom line has also become trickier for players in the manufacturing sector. And add to that global trade tussles, supply chain bottlenecks, and the pressure to explore new avenues of growth in the post-pandemic world, and the tax compliance scenario looks more complicated than ever for manufacturing industries. Now, the digital transformation wave can aid manufacturing businesses in their ability to comply with new tax regulations and reduce their compliance burden due to shifting procedural and regulatory formalities. Automation, say for example, of manual processes in taxation and formulating the right combination of manpower and technology can be the way forward for the manufacturing sector for tiding over daunting compliance challenges. So to discuss more on that, we bring to you this special presentation from Clear on how technology can help navigate financial decisions for the manufacturing sector. I'm your host Gautam Srinivasan, and joining me on the panel are Archit Gupta, founder and CEO at Clear; Naresh Kumar Pathak, CIO at Andritz Hydro; Altaf Jiwani, head of the Group Executive Office at Welspun Group; Ghanshyam Gujrati, CFO at Bansal Wire Industries; and Arnab, CFO at Schneider Electric Systems India. Gentlemen, it's great to have you come in and provide your expertise on the topic. And of course, before we begin, here's a reminder to our audience watching this presentation to fill out a survey form at the end of this webinar. Well, let's start with a broad context set on the key areas where technology can be a game changer for a manufacturing company. Archit, I'd like to bring you in and hear your thoughts on this.
Thank you for having me. And Gautam, basically from a manufacturing perspective, right, like what we have observed is 4 or 5 areas in which technology is really being adopted. As you rightly commented on, like COVID-19 has completely transformed the way in which businesses are thinking about technology, and CFOs and CIOs across the board have started to really think about like the applications and really adopt technology further into and especially the manufacturing sector. Like few things where we are observing massive change are one is like data insights and visualizations, which is driven by like now folks have had to go completely remote, like a visualization and visibility on inventory, demand planning, forecasting, supply planning. These have moved to now more and more digital tools. Like folks have started to use Tableau and other technologies to understand like where they are, like from an informed decision making to using analytics to like identify which decisions to do. Some of the other things we've started observing are AR and AP cycles and digitization in the accounts receivables and accounts payables, given that like now in-person visits, etc., may be less common. Like there may be a complete order to cash cycle which is happening digitally. There may be a complete procure to pay cycle happening digitally for many manufacturing businesses, where the interaction now has moved from like somebody visiting the distributor or visiting the supplier the entire ordering process, the entire servicing process being digital, and only the movement of goods and documentation happening at this point. The third one we have observed is like around working capital. Like one is forecasting working capital needs, identifying them. Then the second part is like due to innovations in things like invoice discounting, which is a rapidly emergent item, and especially in the manufacturing sector, where what we are observing with invoice discounting is more and more large manufacturers want to make sure that their supply chains continue to be healthy. COVID has had multiple waves and lockdowns, which has led to disruptions in both demand, supply, manufacturing, labor, multiple things. Now, in those scenarios, the access to capital it becomes very, very critical during these windows of pressure. So what we have observed is like uh, businesses are adopting more digital mechanisms of working capital, where bill factoring, invoice discounting, access is really creates a whole lot of difference from strengthening the supply chain and bringing certain things to the as a large anchor, bringing certain things to the entire supply chain and taking care of vendors at this point. The fourth thing we have observed is, which is radical in our view, is the complete shift in tax compliances, digitization of the entire compliance suite. India implemented in the midst of pandemic, which is like pretty bold as a country as we go. Electronic invoicing, electronic waybill, along with GST. Obviously, the reform kicked off in 2017, but 2020 is when we said as a country, hey, we need to digitize every single invoice, and we started that. And so what happened with that is like we have started to digitize every single invoice. We are saying like QR codes on for UPI, receiving every invoice is getting B2C QR codes. More and more digital payment adoption is happening as we speak. Like businesses have completely moved to full UPI order to cash cycles and what have you, when we are observing that in the market, right? So what this has led to is the compliance and the government driven digitization is leading to second order and third order effects, which means businesses are saying, hey, if we are transacting with our distributors and our suppliers are sending us data digitally, why do we need teams which are entering data manually, or why are we doing GST reconciliations, etc., manually? Why can't it all be digitized, freeing up like much needed capacity in the finance function, in the finance teams, and costs not going up at the human capital level in these functions, right? Actually, costs going down because the regulatory push to digitize everything, right? Like, and we've seen these tailwinds in terms of the NPCI, the GSTN, the Aadhaar stuff. We are seeing these tailwinds everywhere.
So it's, in a sense, it's a win-win for everyone involved in the ecosystems. But from the perspective of, say, distributors, suppliers, vendors, and also from the perspective of consumers, have the friction points considerably reduced as more and more digitization happens? Because there's always that that issue of some might be legacy, some might be the core might need modernization, and then there is sort of data disparity, which creates a friction, especially for those who are on, those cogs in the supply chain who might not be well versed in resolving these issues.
Right. So I think that's a great question, but it's I think there have been two tailwinds, right? One is GST is now in the fourth year, right? Like in the fifth year starting, right? And so I think people have adjusted. The second point is COVID-19 brought so many tailwinds to like adoption of digitization, and like that mental friction or the physical friction, or all excuses and reasons have been stripped away, right? Like, so I think if you were talking about this in like say 2018, 2019, I would agree. But now, like, I think businesses have learned that there's no way around it. Like smaller suppliers, like you can see that they're using 3 UPI apps. They're using like apps for invoicing. They're using apps for e-invoicing, e-way bills, like using technology for multiple things in running their business, right? Like, so it's been a complete mindset shift. Plus, with COVID, everything has been accelerated. Like I think, as Satya Nadella at Microsoft talks about it, right? We have compressed a decade into 2 years, and that's literally what I am observing at our from our vantage point.
All right, since we have compressed a decade into 2 years, let's hear from our industry leaders on the major shift in finance management and compliance which have come in with respect to leveraging technology. Naresh, considering the comprehensive portfolio of Andritz when it comes to hydro project, what's your view on this?
Thank you, Gautam. This is an interesting topic, I will say, especially when you talk about pandemic and when you talk about our industry. It's not that easy because of the long-term projects. And then we talk about continuous, the receivable piece especially, yeah, because that has been distributed on the milestone basis. When you deliver the project, then you are going to get the money. Now, at the same time, as Archit has rightly mentioned that the compliance pieces where the organization has, they have really taken up a more quick decision in terms of digitization to ensure that they are up to the mark with the compliance. And when we talk about overall technology landscape, as I can see that the senior, the CFOs are there in the panel, and they all understand today is the situation is not that what was some time back. Especially the pandemic has taught us a lot when we talk about digitization, especially from the financial, because that is where is the front line. Whatever front as well as the central point, whatever going on in the organization, everything around the finance. So here, if you look into the automating specific aspects of accounting and finance, not only specific to the compliance, but first we talk about the procure to pay. Yeah, because if I take in my organization, of course the raw material plays a very important role for the ongoing projects. Yeah, so of course the online purchasing where we have giving leverage to the our suppliers, where they can submit even for the large projects their offers, and the same thing we can do this in the online way. Okay, so automating the request for the purchase and then approvals, as well as not only for internal but also with the suppliers, including all the comparison and the bidding, whatever we do. Then as Archit says, the electronic invoicing, those things has already been there, which has been tightly integrated with the DSP process and with the core system. Like, for example, the SAP what the organization have, it's been integrated. Then of course the matching of those, I'm talking about procure to pay piece here. Yeah? And then selection and approving of that all goes into the electronic way. And then of course the payments also, this has been previously, there was organization who say, okay, they're still paying by checks and all, but everything now is in online mode. Now second comes to this record to report. Yeah, because I'm touching upon the important aspects which has direct impact the compliance as well. Yeah, so the month end closes and account verification and the certification and the transactions approvals and building the reports and all from the systems. So these things have been really, but because you have a solid base, yeah, on top of that you can really deploy things, and then you can leverage the real the advantage of the technology.
So where do we go from here, Naresh? Now that you've built a solid base, where do you go from here then?
Sure, this is going to help us, right? The 2 years has gone, 20 and 21, where we have seen the impact. And when you say solid base means 2 years back, I'm not saying that within 2 years, but whatever we have built on the technology within these 2 years on the existing environment, you have deployed those technology and taking the advantage. Say if I take an example, if somebody is using, let's say, SAP in the environment, now within SAP, they have all those, the modules and the activities where they have enhanced, they have utilized, which was not been into the operation before, and they have seen the benefit out of it.
All right. Let me get in another view on compliance and finance management and how the challenges have been dealt with. Ghanshyam, considering the Bansal group of companies is one of the largest steel wire manufacturers in India. So what have been the most common challenges that you have faced in finance management and compliance?
While implementing the initial period, while implementing the plan that we face, so many the traditional, actually our industry is a traditional way of doing the business. We are doing in a traditional way of the business. So we have to teach each and every employee to that. We face in that. In the mindset of the people needs to be changed in that case. And we did that. And for that, we are requiring the IT people, skilled people that, and even to convince the management that because of the cyber attack, all these things we have took place in the past. So all these things need to be convinced to the management level, at the middle level, at the lower level. And data security is also one of the most threatening is that as far as the data security is there. So everything needs to be complied in a very systematic way, and we require to provide a real-time data to implement all these things.
All
So
right. All right. But considering, as you mentioned, there was a need for a mindset change, right? Considering a decade's worth of changes coming in for just 2 years. So what advice would you give to those watching on how to address those challenges? Starting with mindset change and data security that you mentioned. What are some of the lessons from your experience at Bansal Industries which they could apply in their business?
Yes, we improved a lot. We did so many things actually, and now you see that nowadays that without going into that IT segment, without going into that, you can't comply with the compliance sector. Manually, you can't trust anything. That even Mr. Archit has aptly said that you have to go through online invoicing, online e-bill, everything is online right now. Without that, you can't do that. We will have to go through that. Otherwise, we can't survive in that.
Right.
Everything is required in a very real-time management.
Hmm.
It needs to be that in that. You have to, on a click a button, be required to do all these things. Even
all right, real-time management of data that is easy to use so that everyone in your ecosystem can do it efficiently and effectively. That's your advice to folks who are watching, on how to manage this transformation which is going on. Fair point taken, Ghanshyam. Let me get in Altaf as well. Altaf, with respect to your partners at Welspun Group in the entire supply chain ecosystem, how difficult is it to say maintain timely tax filing processes? If I just take that as one of the examples.
Yeah, thank you, Gautam, for having me. Good evening, ladies and gentlemen. So what Archit mentioned actually resonates very well. The fundamental shift which has happened is, earlier most of the technology used to be within your own organization, but now it is the entire ecosystem which is being leveraged by all the organizations, and that is what is actually bringing in the efficiency in the organization. So in our case, for example, we are about a $3 billion turnover company group. And just before the pandemic, actually, we had started our shared service center, Welspun Global Services, which is and we had a business continuity program which was deployed actually mock run just before. So we were, fortunate to be well prepared for ensuring that the finance processes are actually operating seamlessly. One of the examples I'll just pick up is, say, for example, O2C. Now, there's a need for us to submit invoice on the customer's portal because we deal with all these Fortune 500 companies like Walmart and Costco. Now, somebody would actually go and download invoice from our SAP, go to their system, upload it on their system. And before that, he or she will go to the customs portal, find out the customs details, shipping detail, upload all those things. And then on the due date, find out whether payment is happening or not, do the customer reconciliation, downloading the statement from this. Now, entire this process actually is being done by RPA. So today, we are able to scale up our organization without deploying additional FTEs. As a CFO, how do you manage the growth? And while you are managing the growth, how do you ensure that the efficiency also is achieved? And the last part is the risk element. How do you ensure you don't end up carrying the risk? So moment you deploy the technology, you get the benefit of all these three. And because you have eliminated the manual intervention, the risk of errors also comes down very significantly. So this is one example. And fortunately for us now in the last 7-8 years, government has been actually far ahead in terms of digitization. And today we can actually piggyback ride and leverage those platforms. Say, for example, today, there's a QR code requirement for all vendors above 50 crores. I can actually scan that QR code and, eliminate the need for entering all that data into my ERP. Working on systems where my own PR can be flipped into PO, PO can be flipped into vendor's invoice can be flipped into my GR. And that is how I can do that. We have actually given access to all our vendors where they can actually download their own ledger and there's no need for them to call me asking for the balance confirmation. So this has created huge bandwidth for the CFOs because the fundamental requirement of a CFO, which is having timely report and accurate report, that still remains, that has not undergone change. it is the technology which has helped us to crash the timeline. So instead of having a monthly report, you need real-time reports. Instead of having somebody create that report, which is fraught with risk in terms of human error, you are getting a report which is without any manual intervention.
All right.
You are creating.
Are there still some more gaps left, Altaf, in your sense, as we are heading towards more digitization? In fact, the infrastructure issue, which used to be earlier cited, that's also going away. But still, with respect to businesses as large as yours and as diverse in its operations, and of course a diverse customer base around the world, are there still some gaps left with regards to this?
Yeah, it's a very good question, Gautam. See what happens. It's a journey. So. More you travel and you reach a particular destination, you realize that how far the ultimate goal is. And the other thing is, Gautam, many times while you have these ideas, but those ideas do not make commercial sense because of the scale. Important for us to synergize and achieve those scales where technology deployment becomes viable. So many times it's possible that somebody else can do that job better. So you go ahead and tie up with that person and say that, okay, you handle this process for me and I will focus on other activities. So that decision-making of identifying the right partner with whom you can handle and co-create a solution is also very equally important in this journey. So there are, of course, many, we have 29 processes which have been automated through RPA, but there's a pipeline of another 50, 60, which is already there on our radar.
Absolutely. And automation also gives you the freedom to work in the way that suits you best, and also gives your, say, suppliers and distributors to work in the way that suits them. But at the end of the day, the processes are harmonized, and at the end of the day, you are compliant. Fair point. Thank you so much for giving us those examples, Altaf. Let me move on to Arnab. Arnab, how big is the challenge of tax compliance for Schneider Electric India Private Limited on a daily basis?
Very similar to what some of the other panelists spoke. I mean, we are a large manufacturing organization with about 30 plus factories in the country. So a fairly distributed supply chain. So a very similar challenge. But the good thing is, as Archit kind of touched upon, very comprehensively, a lot of points. I think since GST, probably the country has done the biggest ERP we have ever seen in the world. I think with that kind of a infrastructure, and we all had our teething trouble. I think it took us a couple of years to come in terms, but thankfully, with most of us are in a phase where probably we have the matured organizations have 99% higher reconciliation today with the suppliers, and the customers. So we have reached a fair good stage of maturity. I think that way the journey has been painful, but I think quite rewarding at times.
But what are the secrets of your success, in terms of managing speed? I can understand digital native companies doing it, but manufacturing with so many elements at play, it's not going to be easy considering the speed at which everything is happening in terms of digitization. So what are the secrets of your success?
I think the secret has been to keep it simple. I think appreciate the need. I think kind of GST was the starting point. It kind of pushed all of us in that direction. But a company like us, who are, I would say, if not the best, at least quite evolved in the automation and digitization. So for us, we had digital systems all across. Yes, as Archit rightly said, COVID has definitely accelerated by a decade. I fully agree with that statement. I think so. We have been, pushed to use more and more digital tools. As Altaf said, a lot of bots are now used for tax compliances, and that's increasing efficiency in a big way. So a lot of things you can now, you can schedule programs, you can interlink it, you can do it. What it also brings is a lot of efficiency in terms of the working capital management. I think if you take a step back and look at it, in the last couple of years, companies have become much more efficient in managing what used to be, categorized as a loans and advances and is sitting as an idle tax deposit. So that amount has gone down significantly for many organizations, and which is building in eventually a better ROI on your P&L, on your results. So I think that's been the most tangible benefits.
Absolutely. And you're talking about unlocking value which was earlier dormant. What else?
I think the other thing, that's been the biggest part of it. I think what your earlier question, I think you asked one of the panelists, I wanted to comment on that. What can be done better? See, probably now we have a completely interlinked supply chain. If you see, the suppliers and the customers, the companies, we talk to each other. In terms of the government compliances, the different government departments are still not talking to each other. I think that that's the next level of simplification we can get into. Because if that happens, the cost of compliance will further come down. Because today, I mean, if you see, you have to do quite a bit of redundant filings, which if you take a step back, you don't need to do it. It can be interlinked in the backend because the data already exists. And I think it requires a very big change acceleration process, I would say. Mindset in terms of the regulators, how they are dealing with each other, how they are kind of more and more training them to take use of the data which they already have with them. And then from a tax payer perspective, simplifying some of the forms. I think there's quite a bit of possibility of simplification. I think that's the next level of digitization we would look at from the industry standpoint.
All right. You mentioned unlocking value. It also unlocks management bandwidth, right? It unlocks time for the management to focus on issues which they otherwise would not have, and makes the organization much, much more responsive, robust, and working on issues which actually help it grow.
No doubt about it. It also has a lot of other intangible benefits. With the supply chain getting linked, your accounting compliances increases. The reconciliations become much more robust. So beyond, I mean, the core tax compliance, this is a lot of other associated benefits which comes with it.
All right. Any areas where there's still a lag which you feel there could be improvement?
I already commented earlier on the interlinkages between the different tax departments. Like
that's one. That's from the policy perspective. I'm saying internal process perspective of companies. What's your view? Anything which you would think would be a priority area to work out?
I think most of it, I would say, in the last couple of years, I mean, we have kind of been able to plug it. I think it depends on the maturity of the organization. An organization like us, I think most of the things we have been able to plug by now. I see a fairly evolved process at this stage.
All right, fair enough. Archit, you've heard all the industry leaders talk about their experiences, talk about how it's transformed them, and of course, unlock the benefits for their organizations. For the viewing audience, to recap, what are the top 3 areas where technology can come in handy for the manufacturing sector to manage their finances? This is from the perspective of those who are watching, who might want to apply those kind of technologies to their organizations to unlock the benefits.
Yeah, as I like really resonated with the panel because this is what we hear from our customers and partners every day, right? Like some of the, and I'll break it down to real application and brass tacks instead of like just high level, right? One, as like the panel mentioned and especially Altaf mentioned, right? Like the 2 things which are happening, right? One is the digitization of your invoices, of digitization, which is led off by e-invoicing, and the QR codes are kicking off, right? So one thing which we have seen is in the procure to pay cycle has been like the real application of one invoice reconciliations being real time or close to real time, which leads to decisioning on vendor payments in terms of like whether the input tax credit is available, not available. So these are instances we are seeing like where businesses are applying this as we speak, like how much of the invoice to pay out, like maybe positive reinforcement where if you're complying with ITC on time, like we'll pay you like maybe a day earlier, or like we'll hold on to the just the tax amount while we wait on the input tax credit to show up. So there are these various models businesses are applying with some of our technologies which we are observing at large, and these are big decisions because people want to take care of the supply chain. The second one from the manufacturing perspective has been literally as the panel mentioned, no addition to headcount or full-time employees or even contractors or call centers using the electronic invoicing or QR codes and what have you to completely digitize the process, to have data moving from the supply chain into their ERP systems and doing the PO flip into an invoice, PO flip, like multiple of those processes are kicking in now because of the nature of the electronic invoice, because the government mandated a JSON format, which is just a format which describes the protocol. But as a technologist, I like to talk about technology way too much. But the what that means from a customer perspective, though, is like you don't need to do like a lot of checks, like manual data entry, mistakes go away. You're getting data from the source, and since the supplier has generated an e-invoice, they have done their checks and balances. There's a completely digital auditable trail available for this. The third benefit is now what we are seeing, real practical application that I'm talking about is One is like bill discounting, invoice discounting for these vendors. So these are very, very simple scenarios that we've seen real practical applications emergent on the business side. Now, the same revolution essentially is happening on the customer side or the distributor side, where customers and distributors can pay via digital means, because as the panel mentioned, like B2C QR codes are available on every single invoice. Then that gets knocked off and settled the moment that payment hits in. Businesses are using virtual account numbers now at scale with every distributor, or because what that does is it settles every business account, and you get a real-time view. And the panel has been talking about, right, how do you move from monthly reconciliations or monthly views of your business to a real-time view, right? And this technology, the fintech evolution which the country is seeing, especially in payments, taxes, invoicing, credit, is really coming together. So I think the next 3 years is going to be very, very rapid evolution. RPI was one. Now the cloud and SaaS, which for example we are deep in, right? Like that is our vantage point. So cloud and SaaS, what that means is businesses, and this was mentioned by the panelists as well, like businesses want to identify the right technology partner, but also share risk. And what does that mean? Cloud providers are coming in, which are changing capex to operating expenditure, capex to opex, which is happening, and that de-risks large enterprises, because earlier capex projects won't go live for 1 year, 2 years, and so you'd be stuck like whether this project would go live, like will the organization receive the benefit, and there was so much risk on the head of the CFO and the CIO, and they would like be very worried about these decisions. With cloud, you can take a go live decision, you usually live in 1 month, 2 months, 3 months, and if you're not deriving value, you can switch it off, and so you don't have big risk. And if you're not getting value or you're not getting results, you're not out like of a significant chunk of capex.
It allows them the experimentation to kind of see what works and what doesn't. But considering the exponential boost in demand, which we are expected to see, because in the past 2 years, demand has been depressed. And once demand comes in fact, a lot of folks are talking about supply chain issues, as in supply issues actually being the problem and not demand. In that context, considering all the developments in financial processes which are happening, are companies at least well set on that front, that even as they expand to newer markets, let's say tier 2, tier 3, tier 4, and in global markets, the financial processes are all set for them to scale up more effectively than they would have otherwise? What's your view on this, Archit, as we look to wrap things up? And maybe we could get one or two other panelists to comment on that as well.
Right. So I think very quickly, I'll not take too much time because I want to hear from the panel, but the view on analytics and on the supply chain is becoming very, very essential. And that is, I think, somewhat new. I'll share why is it new, because we heard like there have been shortages on crazy things, right? Chips. We are running out of chips in the world, right? Auto manufacturing is dealing with that. Today, like there was a report on running out of coal. Then there's another report of shipping containers becoming so much more expensive, and so on and so forth. So I don't want to take a deeper view than that. I'll let the panel comment on it. But there's definitely supply chain challenges we saw in iron and steel and commodities. And so I'll let the panel comment because we have the experts here.
All right, let's see who wants to comment. Altaf, your point of view on this, considering, as I mentioned, especially as demand comes back and comes back with force, the question then becomes of supply. But considering your financial processes are all digitized and in order, do you feel you're in a better position to manage all that volume?
So see, this supply chain actually took all of us by surprise. So none of us were actually ready for it. And in our case, 90% of our revenue comes from exports market, US being the largest, 70%. So we actually, along with our partners, started creating a kind of dashboard to monitor container from the day I have requisitioned from the shipping line till the day it has been emptied at the customer's warehouse. That is what actually helped us. And this was not the process which we had originally, it was on our radar at all. But it is a necessity which actually forced us to do that. So idea is today you have partners who can actually create solutions on the go. On other days where you have a large organization who come do design, system analysis, and then deploy team, and then implement, then there's user testing, and this whole process transition programs used to be running into multiple years. Those days are gone. We have to now work on a way where I should be able to deploy a solution within a month, within 4 weeks. So people are now started talking about this. That's the fundamental shift which has happened.
Absolutely. Agility and thinking on your feet. That's now become any organization's hallmark. Arnab, any closing thoughts as we wrap up the discussion on this?
I wanted to comment on the point of agility. I think that's what is happening. I think now you have multiple suites of solutions to choose from. I think what is happening is the code is becoming much more parameterized. If I have to talk it a little bit in terms of technology, I think now most of us, we have multiple tools. I mean, the ERP is definitely up to a certain level, but then you have a suite of things which we loosely call a middleware, and that middleware is becoming more and more well defined. And then you have visualization tools like Archit talked about Tableau. We use Tableau in a big way. There are other products. So there are multiple products. Your choice of products can be anything, but the whole thing is getting more and more integrated. And with the front-end visualization tools, and a lot of the manual work getting taken by various analytics tools. RPA is one of them, but there are other AI tools. And the whole concept of a big data has really come up in a big way. So if I talk about the finance function today, I have a fair good amount of data scientists and engineers in the team. I wouldn't have thought it 5 years down the line. So that's where the evolution is going.
All of our roles itself are evolving, where we don't know what happens next 5 years. And I'm sure the designations, the meaning of those designations itself would change. Fair point. Speed is the game. Naresh, your closing thoughts on this topic?
Yes. So as I can hear from Arnab and Altaf about the speed, delivering things, talking about big data, AI, analytics, visualization. So those tools are there, and nowadays they can integrate well through the APIs and all, not to have a consolidated view of these things. But here the cloud plays a very important role. I would like to close with that. The speed you can achieve, like Altaf says that something you need to deliver within 10 days where you were doing in 10 months before, or even within a week. So the cloud is the one which is helping, whether you are pure on cloud or you are on a hybrid cloud. So that's what I would like to say. The cloud has played an important role during this time.
Absolutely. There's speed, but there's also scale. That's what you're saying. And that's where the cloud enables.
True.
Absolutely. And that's going to be important, as I mentioned, as demand comes roaring back. It's also going to be testament to an organization's strength as to how quickly they scale up and how their financial processes are in sync to have that goal being realized. But, we have run out of time. So on that note, it's time to wrap up our discussion around how technology can help navigate financial decisions for the manufacturing sector. I'd like to thank all the panelists for joining us and sharing their insights on the topic. And of course, thank you to our audience for tuning in as well. Remember to fill out the survey forms as we conclude this webinar. For now, this is Gautam Srinivasan signing off. Have a great day.